Over the last few years, global wealth migration has accelerated rapidly. High net worth individuals, investors, and internationally mobile families are actively searching for long-term tax stability and predictable lifestyles. Historically, they didn't have to look very far. Countries like the United Kingdom, along with Malta and Italy, easily absorbed this migrating wealth. These traditional European and Mediterranean systems offered highly attractive tax environments for mobile capital. But recently, the rules have changed. Across the board, several of these European non-domiciled tax programs, systems designed to legally exempt foreign income, are becoming shorter, significantly more expensive, or heavily restricted. This tightening across Europe has created a massive, immediate vacuum. Billions of dollars in mobile wealth are now urgently seeking a new, stable home. Right at this exact moment, Turkey is moving in the complete opposite direction. The country is aggressively drafting new legislation to capture this abandoned global market share. Lawmakers are offering exactly what European competitors are currently taking away. To do this, they are simultaneously targeting two very distinct demographics: passive wealth holders and globally connected service professionals. The government is executing a calculated structural pivot, designed specifically to position the country as one of the most attractive tax bases in the world. For passive wealth holders, the anchor of this strategy is a proposed non-dom regime, a tax framework explicitly aimed at individuals relocating to Turkey with overseas income. To qualify, an individual cannot have had Turkish tax residency during the previous 3 years. If they pass, the benefit is massive: zero Turkish income tax on foreign source income for 20 years, covering dividends, rental income, and capital gains. Interestingly, the proposal specifies as if someone already has prior Turkish tax liabilities from existing local property or investments, it won't automatically disqualify them from applying. But the most remarkable provision in the draft applies to estate planning. Individuals benefiting from the foreign income exemption may see their inheritances subject to a highly reduced transfer tax rate, potentially as low as 1%. Compare that to many competing European countries, where inheritance taxes routinely carve out massive portions of an estate. Combining a 20-year income exemption with a near-zero inheritance tax makes Turkey a highly competitive destination for family offices, prioritizing multi-generational wealth preservation. The digital economy represents the second front of Turkey's strategy, targeting active professionals. Turkey has finalized a major incentive system for international service businesses, taking effect in April 2026. Qualifying businesses can claim a 100% tax deduction for income derived from specific services performed from Turkey for clients abroad. The scope targets remote-first activities: software development, data analysis, architecture, engineering, and digital design. In practice, provided the legal conditions are met, this effectively creates a zero-tax environment for qualifying remote workers. It positions Turkey as a global magnet for borderless service companies and top-tier tech talent. Of course, tax incentives on paper mean very little if the actual location lacks basic livability. People won't move their families or businesses to a place that doesn't function. This is where Turkey leverages its geography. Istanbul remains one of the most highly connected transit hubs linking Europe, the Middle East, Central Asia, and North Africa. And compared to high-cost alternatives like London, Milan, or Dubai, living and operational costs in Turkey remain highly competitive. That cost advantage comes paired with an advanced digital banking system, a strong private healthcare network, and numerous international schools. This specific combination of lower operational costs and high-tier infrastructure provides the exact functional balance that internationally mobile families and remote businesses require. Turkey is reinventing itself as a sophisticated hub for international capital and talent. This new reality is built on 3 specific pillars: a proposed 20-year foreign income exemption, a potential 1% inheritance tax rate, and a finalized 100% deduction for exported professional services. Together, these policies form a targeted economic strategy, engineered directly to capture the global capital and digital talent currently fleeing more restrictive nations. If these draft proposals pass into law, the center of gravity for mobile wealth will steadily adjust. The map is pointing straight to the crossroads of Europe and Asia, setting up Turkey as the world's next major tax haven.